Oh man, so Bitcoin opens up powerfully green, 2.6% up at the time of recording this video, but I've just seen something in the chart which has me hugely worried. We could be breaking a negative catalyst, a record negative catalyst to the downside on the on-chain metrics. I've got so much to show you guys, some really interesting content in this video. If you appreciate it, smash up the likes and subscribe as we go through it. And if the video deteriorates, you can undo your smashing of that like button. As you can see, guys, 2.65% up here on Bitcoin. If you guys are trading, check out the links in the description to BYBIT, to BitGet, because we are getting some really nice channel moves here on Bitcoin, which really do present themselves for nice trade opportunities. Yesterday, you saw us monitor this uptrend. It was a nice, good trade opportunity, and we watched for the breakout. I shared these alerts in the Telegram, so make sure in my free Telegram group, links in description, caught the breakout to the downside, and you can see we're creating something similar here. I mean, look at this hourly candle on the bounce of this trend line here. Do not be surprised if it tries to get a run up and then come back test back towards here when the markets open. So that's something we're looking out for here on the short term here on the hourly. Now, if I zoom up back to the 4 hourly, and this is before I go on to the on-chain metrics, just want to give you a stance of where we're at on the charts. You can see again, we're running into our 4 hourly EMA ribbon. Remember the last time we ran into this, culminated in a big fall to the downside. We set our technical price target at around 19,200. We touched 19,500, not too shabby for calling it from when we were all the way up here. Now we're running into our EMA ribbon. Are we going to get rejected? If we get powerfully rejected from our 4 hourly EMA ribbon, fall back below 20,000, create a lower low, that could then be pretty painful here on Bitcoin, okay? So are we going to do something like this? This is what I want to be looking out for. Now, those that are excited about the markets and thinking we can manage to go long, I'm not convinced, right? I'm not convinced unless we can really hold 20,000 and try to do something like this. I mean, it would be very unlikely that we just go do this. And even if you do, that is super against the trend and very, very dangerous, and you're looking to get yourself liquidated, because right now the bears are in strong control. When I show you these on-chain metrics, hopefully it's going to give you some perspective on what's going on right now. Switching that up to the daily chart as well, you can see where we're at on the daily chart, and we're hugely extended. But if you notice, every time we move, we hang for a bit and then we fall. We hang for a bit, and this is very normal in technical analysis. So what we are looking for is how long are we going to hang here? We hanged for quite a while here, right? And it led to Jerome Powell throwing us to the downside. But let's see how long we hang. Is it going to be another couple of daily candles before we get another move to the downside? And that's what I'm looking out for, is are we going to come and test the bottom of this channel? We're going to come back to 19,200, 18,700. That's the region I'm looking for this next move into that kind of a range there on Bitcoin. Now remember, when Bitcoin falls, each bit becomes progressively harder for Bitcoin to fall, right? When you're falling all the way from the top here on Bitcoin, that first bit is easier. Think of an elastic band, right? You're pulling an elastic band back. The first bit is really easy to pull back, but successively, each millimeter becomes harder and harder and harder. So each $1,000 on Bitcoin here becomes harder and harder. So it's not a case of what people are shouting out, oh, we're going to go to 10,000. You got to remember, to go to 10,000 from where we are now is a 50% fall, right? We're at 20,000. That's huge. That's a big fall right now. It's not just the case of, oh, you look at the value of, oh, it's only 10,000. We've fallen from 69 down to where we are. That's an even bigger fall, right? No, it's the percentage. It's the move. It's that elastic band. It becomes harder and harder to progressively throw any more to the downside. That is why if we do get into this range, I will be looking to nibble some more. And if we fall back to test some of these lows at 17,600, I will be nibbling some as well. Let's get a quick check of the fear and greed index, and you can see it's fallen back to extreme fear. I said this yesterday. This is no surprise given that Bitcoin struggled yesterday, but again, this is a lag measure. Remember, this gets refreshed at the start of the day. So if Bitcoin has a positive day today, then that will show positive again tomorrow back to 25.26. So be cognizant of that. Take a quick peek at the Fed rate monitor tool just so we know what's going on, and you can see the market's at 70% pricing in a 75 basis points hike. This is the main theme of the market. This is why markets are worried. They are worried that central banks mean business. Jerome Powell came out and said the same thing. Europe is saying the same thing. Dollar index we'll take a look at is showing similar trends, and what we can see here in the pre-market is the Dow Jones is flat, S&P is flat, and the Nasdaq is just up 0.5. So Bitcoin is taking it on its own accord to move here, which is very, very interesting. I mean, we were starting to see over this last week or so a really weird decoupling going on, where Bitcoin's, you know, when equity markets are having green days, Bitcoin's still having red days. Equity markets are fairly flat at the pre-market today. Bitcoin's deciding to run for 2.6%. But I would be careful, because if the markets open up in the red or change halfway through the day and try moving into the red, I feel like Bitcoin will start to fall with it. So I'm not sure what the substance is behind this pump, apart from a few people just buying the dip at this consolidation phase, right? That's what we're looking at. Now let's take a look at some of these really interesting on-chain metrics. And the one I wanted to lead with is this one. This is the number of active entities. And the best way to think about this, if you talk about things like Facebook or Snapchat, I don't know if you guys are familiar, but the way they monitor how effective that business model is, they look at the daily active users. It's the same for Bitcoin. How do you know if it's a good asset class? Well, you look at the number of active entities on the network. Are people using it on chain? And that's why we do on chain metrics. It's like the same when you're investing in stocks. You do fundamental analysis, right? If you're buying Apple stock, how many iPhones are they selling? Same for Bitcoin. How many people are actually using the network? And when you look at it, what you'll see is if I pop my ugly mug to that side there, you'll see that we fall into this channel. And this is your bear market activity channel. So anytime you're in a bear market, you can see you come off highs here where my cursor is. Fall to the downside, you get into your bear market activity. You had your little fake out here where you could see here in 2019 it looked like it was going to go back for its next run. Nope, thrown back into the bear market channel, and then it broke out for the run up to 64,000 for its next all-time high. Now you can see here we then fell back into our bear market activity. The second run up was similar to this, right? It was like a fake out. We ran up to 69, but really people were taking profits, and now we're back into our bear market activity channel. But now you can see what's happening. We're hovering awfully close here to the bottom, and this is what I'm scared of, right? If we fall to the below this will be the first time ever that we've fallen out of this trend line, and this could be particularly nasty. Okay, this could be particularly bad, and that could particularly tell us that we could be in for a nasty last big capitulation. And that's what my view of where we're going to be heading is. I feel like there could be, I've said this for a couple of months now, that there could be that one test down to 17,600, maybe even lower, right? Maybe down to that 15,000. You've got your delta price there. You've got the balance price. These are other metrics we've spoken about in previous metrics, which can act like price floors. And that is something I want to watch out for and be prepared for here in the market. So that's something I'm definitely keeping an eye out for. Now, if we take that forward, we can then look at something called ASOL. Now, ASOL tracks the average age per spent output. Okay, so who is spending their coins right now? Is it young people who have just started, not young in terms of age, but in terms of how long have they held their Bitcoin? Or is it the higher lifespan values, the older coins that are being moved? And what you'll notice is when this number is low, that means that young ages are spending their coin. This normally happens. Okay, this normally happens in bear markets. When the bear market grinds lower and lower and lower, it becomes harder for these weak hands to hold, and they capitulate and they sell. Long-term holders, the older coins, tend to do better with that. But when you see this peak, this is normally a good sign of trimming profits and taking profits by the older coin hands. So you tend to see this peak in big movements to the upside. Now, what's interesting is you saw a few peaks here out of the norm. And the first one is this one, right? You saw your massive peak here above the baseline. And secondly is this recent one on our pump to 25. And this is why I continue to say on my videos, I never expected anything more than a slight relief rally. There was no way on this current move, according to the on-chain metrics, we were going to be able to have a big move back to all-time highs, because as you could see, people were profit taking, including people who were holding their coins for a long time. They were taking profits on that run up just now to 24, 25. So it was never going to be a sustained move. It was against a trend. We're still in our bear market. Price continues to be weak. And it was just some people deciding to take profits. So we never had the momentum on our side. Now, what this therefore proves is that currently where we're at right now is that the current demand, people wanting to buy Bitcoin, is not matching up with the overall sell activity. And that's a problem, right? Because ultimately that's going to lead your price to start falling. So the general momentum of sellers continues to be greater than the general momentum of buyers. And that's without taking into consideration big capitulation. So overall, not looking particularly healthy. And that's one of the things on my mind as well. If we then take a look at the net realized profit and loss, what you can see here on this net realized profit and loss is we are continuing to see $220 million a day of realized losses. Realized losses is when people are selling their Bitcoin less than they bought it. They're realizing a loss, right? Now, whilst this is low, and it's much lower than the billions of dollars a day we've seen on crazy capitulation days, and you can see that here on the chart, it's still a worrying trend because it's showing you what I was saying. The slow bleed makes it difficult for any bullish momentum, right? If everybody who's holding their Bitcoin is willing to accept to sell it for a loss, that makes it very difficult for you to get any bullish momentum to the upside, because as soon as you get to 23, 24, 25, you start getting that selling again. And that's the activity we're seeing. We're getting a little pump up to 22, and then people are selling back down to 19, pump back up, and this normally indicates that you're ready for a long move to the side. And I shared that in another video a couple of days ago where I showed you that the realized price curve acts like support. And you can see that the blue dots, I don't know if you remember I shared that chart with you with the blue dots, that can sometimes happen for a long time. You can go sideways around your realized price for up to 12 months. We've seen that in historical bear markets. And that's again because of that. The bears don't necessarily have much more strength to break you below your realized price because then people will buy. But then what you see is that once you start running above your realized price or even getting close to it, people start selling even at slight losses because they just have this get my money back mentality. So we've got a lot of that going on as well in the market. Now, another thing we can look at is something called your SOPR. Now, SOPR is really interesting because what it does is it lets you know, are people generally selling at a profit or are they selling at a loss? If this number is greater than 1, which is this horizontal line here, this is at 1, this horizontal line. If it's greater than 1, that means people are selling at a profit, okay, more than they bought their Bitcoin for generally. If it's below 1, they are selling at a loss. If it's at 1 exactly, they're breaking even. Now, what you notice is in bull trends, when the price is doing really well, you notice that the SOPR equals 1 line, the break-even line, acts as support. Every time we've touched this on the SOPR, we've then had a big move to the upside. Touch it, bounce off the upside. In a bear market, however, when price is declining, you can see the price in a downward trend from this phase, it acts like resistance. Okay, so this is exactly what I'm saying. Anytime in a bull market, when you're in a bull market, anytime the price comes close to the realized price, people are buying. Anytime they're getting close to their cost basis, they're buying the dip, right? They feel confident that it's at their dip price. And equally, in a bear market, anytime the price is getting back to their average cost basis, they're selling because they're like, oh, I've not lost any money. I just want to get my money back. So this is why you end up in these long sideways bear market channels, because that's the behavior you see in the market, is where it starts to act like resistance. And look at specifically what we've just seen here. You don't get more perfect than this, guys. And I said this at the time when we were running up to 25. I said, look, people are taking profits here. Right? People are taking this relief rally to take profits. That's why I do not see this getting up towards 40,000, 50,000, 60,000. Some people are claiming 100,000, right? It was not going to happen because people are selling into this. As soon as SOPR touched 1, which is where those people are breaking even, which was at around 24, 25K here, they sold. And then we've got a rejection to the downside. Now, if you look last time we got rejected, look how big that move got taken to the downside, right? We got a big move to the downside here. Will the same happen again? Will we go test some of those lows at 17,600? That is what we need to be looking at right now. One more metric to show you guys, and again, not great news, right? I'm sorry to be the bearer of bad news, but I'm here to be realistic with you. I'm here to be realistic that we're in a bear market right now, and right now it's very difficult for these bulls to sustain any move to the upside. And as you can see here, what I'm looking at here is the same thing, the SOPR, the spent out profit ratio, but just for long-term holders, people who have held for 5 months or more. And what you will notice is the same thing. They are currently sitting at less than 0.6. In other words, they are willing to take about 35 to 40% hit on their Bitcoin purchases to sell now. Okay, that's what we're seeing from long-term holders. But you have to remember that the definition of a long-term holder is somebody in this case who's held for more than 5 months. But the problem is, in my mind, the way I like to categorize it, that just means somebody who bought in 2021, 2022 range, right? So those people who were buying in 2021, the FOMO, buying up to 64,000. In November, they were buying up to 69,000. Those are the ones who are now selling at a realized loss. They've had enough. Maybe it's their first bear market. They've capitulated, right? That's the word. That's the word. It's capitulation. They've had enough. It's exhausting. Maybe they put their life savings into crypto. Maybe they put a bunch of money into crypto, and it's been sat lower and lower, grinding lower. And when it gets close to the realized price, they're out of the market. Okay, so this is important to notice. Is that what we're seeing? And they're even selling at 35, 40% losses, guys. If you imagine, if you do the math, if they're selling at 35, 40% losses, and we're sitting at around 20K, then maybe they were buying in around 30, 27, 28, 30 range, right? So they could have been buying in the summertime of 2021. Okay, so that's what we're seeing here. And that's, again, another reminder that at the moment, we've got to get my money back mentality. And it's not until this changes that we can see serious sustained moves to the upside for Bitcoin. This is the definition, really, of your bear market, your sideways bear market. But the good news is it doesn't look like the bears have amazing strength right now. Right? It's not like the bears have super strength that they can keep throwing us to the downside. That's yet to be seen. But what we have seen is around this 19,000, 20,000 level, the bulls aren't able to sustain any momentum because anytime you get a little move to the upside, the bulls are taking profit. Okay? So we could see this sideways move for a while. Now, what does this mean? What does this mean for the long term? Well, nothing, right? If you've been around these markets for a while, you know that these are the opportunities when you'd want to be accumulating, right? If you looked at these periods before, again, if I just throw this back on screen, if you looked at this historically in the 2018-2019 bear, you were accumulating in this period where this indicator, the long-term SOPR, was below 1 and in this kind of range, you would have done really, really well on the next run-up, right? And that's the point. It's about accumulating in these moments when everybody is fearful, when nobody is is feeling like the price is going to go up, when everyone's lost hope and forgotten of the potential of Bitcoin, that's when we want to roll up our sleeves and do some work. And when it gets to the other point where the tourists are in the market, everybody's talking about Bitcoin to 200,000, 300,000, or whatever other crazy number they think of, that's when we need to be thinking about trimming our profits, right? That's when we need to be looking to take our profits. When the on-chain metrics are looking super healthy, everything is looking great, people think it's infallible, that's when we should be like, okay, we need to take some chips off the table here. But right now, what am I focusing on? I'm personally focusing on dollar cost averaging some more. I've shown you those technical levels. If you want to see my updated charts with the levels that I'm buying in at, check out Coin Panel as well. I do share all my chart patterns over there. Thanks for watching, guys. Don't forget to go watch this Polygon Matic video. You guys have to go watch this video. It's been really well received. Go watch it and let me know, what do you think of Matic as a project in the layer 2 space? We are 2 weeks away from ETH 2.0. A lot of people are claiming that Polygon Matic and other layer 2 solutions could be struggling. My take on it is that Polygon Matic and other layer 2 solutions will continue to show strength and will continue to be needed despite ETH 2.0. Hope you guys enjoyed. Smash the likes and subscribe. I'll see you in the next one.